From our Stars and Dogs segment, it's time for this week's Star.
Star of the week, Hammond Power Solutions Inc., symbol HPS.A on the TSX. $20.50, $241 million market cap, not a billion. We'd like it to get there, but not anytime soon. 2% dividend. The company has a history that dates back over 100 years. They enable electrification, I said it better this time, through a broad range of dry-type transformers, power quality products, and related magnetics. The company serves the oil and gas, mining, steel, wastewater treatment, commercial construction, data center, EV charging, where it is in every Tesla station across Canada, energy storage, solar, wind power generation, industries, all these industries. So let's look what drove the jump in the share price. Q3 results 2022, sales increased 56% to 149 million. Earnings went to 97 cents from 34 cents in the same period last year. The order backlog increased 141%. Cash generated 16.5 million in cash from operations in the quarter. The numbers were great across the board as costs stabilized, margins recovered from the second quarter. They have historically high production volumes. That's having a positive impact on margins. They continue to experience a very favorable environment with sales across all business regions continuing to grow at the highest rate in the company's history. Given the momentum and the number of business opportunities management sees around the business, they have announced prudent spending, capital spending moving forward selectively in terms of their manufacturing capacity and service capacity. So the company has a cash position and balance sheet that have continued to strengthen over the first 9 months of this year. It's gone from a net debt position to significant net cash, provides a solid foundation to grow organically into 2023 and beyond through organic and through acquisition. Now the stock is up 67% year to date, 20% in the last 2 days. Despite this, it will likely earn north of $3 per share this year. It gives the stock a PE of well under 7. The gains this past week, however, and year to date, give Hammond Power the coveted status of our Star of the Week. Okay.
Very rare to find a company outside of energy with that kind of a year-to-date.
Yeah, it's true. Well, one thing that they've been able to do is they got ahead of inflation with price increases over the last year and into this year that have allowed them to, maintain margins. And I think you do have a perfect storm. Like their traditional industries, huge transformers for the mining industry, which has been doing well, the energy industry, which has recovered significantly. And then you've got them in EV charging, data centers, and solar. So all of those areas at once. Typically, it has one area doing well and another area not doing so well, and then it kind of shifts back. I think they've got a pretty perfect storm with some price increases. You can't expect that growth going forward in this business. Like that is historic growth. It's not going to happen going forward. But the share price has done tremendously well. They've upped their dividend. They probably up their dividend next year. It's just a sleepy little business that Canadians don't own. It's a company that pays you a dividend and has some growth and is trading at relatively reasonable prices. Will not be growing at 50 to 75% year over year every year, but over time it's in some good industries and should, as we see the world continue to electrify, this company should participate as kind of a backbone to that.
Mm-hmm.